Hello everyone, this is Petko Alexandrov and I'm recording from one of my trading accounts where I have different expert advisors trading on different assets. If you have a look at the navigator, you will see that I have a variety of assets and I have been trading with different expert advisors. On each chart I have an expert advisor and they are all trading at the moment. And in this video I would like to talk more about the expert advisor and what that is. And for the beginner traders I will demonstrate how to make a backtest, and simply you will learn more about these trading robots. So Ilan already showed to you how to place the expert advisor over the chart, and I will place the very same expert advisor on a new chart window. It was for euro dollar, and I will right click over euro dollar. I will select chart window, and here it is. Now what I need to do is to go to file, open data folder, and then I click MQL4 and I go to experts. I will drag and drop the expert advisor that Ilan showed in his video, and I will close the folder. I will go to expert advisors in the navigator, right click and refresh. So this is how I will compile this expert advisor, and it was for euro dollar on M15, and it has the magic number of 51812206. Now before I drag this expert advisor on the trading chart and I show how to make a backtest, I will show you what is the strategy behind this expert advisor. And the strategies for all expert advisors that we use, they are different. So they buy on different rules and they sell on different rules, and that's the idea of trading. And this is why we trade with many expert advisors or many trading robots, because we want to buy based on different entry conditions and to close the trades based on different exit conditions. So for example, this expert advisor uses 2 entry conditions and 1 exit condition. Let me zoom the chart and I will place the indicators over it. I will go to insert and indicators. The first indicator that I will place is the Bollinger Bands. For this strategy we have period of 35 and we have deviation of 1.34. And I click on OK, you will see the indicator displayed on the chart. Here it is. We have 3 lines, and how the Bollinger Bands indicator works is that when we have volatility on the market, for example, you see in this period here the price went down and the upper band and the lower band went far from the middle line. And when there is no volatility and the price goes just sideways, they come closer together. Alright, and the same thing here. You see there is a volatility upwards this time and the Bollinger Bands just open. And when the price goes sideways, they just get closer. Alright, so the entry condition that we have with the Bollinger Bands is that we buy with this strategy when we have 1 bar opening above the lower band after opening below it. Or just what we see right here, we have 1 bar that opened below the lower band, and if the next one opens above the lower band, this is our signal to buy. But we have as well confirmation with another indicator called accelerator oscillator, and I will just add it from insert indicators, and it's the first one in the list, accelerator oscillator. It does not have any parameters or levels. It is displayed below the chart with green and red bars. If I click on OK, you will see it right below the chart. And the rule here is that we have the confirmation for the Bollinger Bands to buy if the accelerator oscillator crosses the level line downward. Okay, at the very same time, when we have the signal to buy from the Bollinger Bands, we need to see that the accelerator oscillator crosses the level line, which is the zero line, downward. And in this case, with this example right here that I just took randomly, you can see that the accelerator oscillator crosses upwards. Okay, so the accelerator oscillator is if you connect the bars or the ending of these bars, I can say. So in the middle we have the zero line, and then if you connect the tops and the bottoms of the green and the red bars, you will have this imaginary line, and when it crosses the level line, this is the conformation. So let me look for such an example. I will use the crosshair again, and I think right here we have such an example. Okay, right at this bar. So at this moment we have a bar opening above the lower band after a bar that opened below the band. Or in simple words, this means that the price crossed the lower band. And at the same time, you can see that the accelerator oscillator crossed the zero line downward. And here would be an entry. Let me put one vertical line, and I will put another line exactly on the opening of that bar. So right here we have the conformation to buy. And this is our entry with this strategy. The very opposite thing applies if we are selling. So we should see a bar that opens above the upper band and a bar that opens below the upper band, and that would be a sell signal. But at the same time, we will need to see that the accelerator oscillator crosses the zero line upwards, which in this case happened a little bit earlier, 2 bars earlier, or 2 candlesticks before the signal from the Bollinger Band. So there is no conformation. Now let's stick to this example, so I will show you what is the exit rule for this strategy. And when we enter in the trade, this is pretty much half of the work. Okay, we need to exit from the trade. So at this moment we buy, and then the question comes, when do we close the position? Now for this strategy we have a very nice exit condition which I like a lot, and this is the crossover of the moving averages. So if I go to insert indicators and I go to trend, I will see the moving average, and I will need to place 2 moving averages. One will be with period of 22. I click on OK. Here it is, the line with the red color, and I will add one more moving average with period of 32. Okay, and I will change the color to anything. Let's make it just more visual. I will make it blue, and I will click on OK, and you see here is the blue line. And now since the blue line is the slower moving average with a bigger period, you can see that it changes its direction later than the red moving average, which has the period of 22. And because their parameters are different, you can see that they cross. And exactly the cross is our exit condition. So for the long trade or for the buy, we will exit when the fast moving average, in this case is the one with period of 22, or the red one, crosses the slow 32 or the blue one upwards, which comes a little bit later. And if I zoom the chart, you will see that here is our entry and here is the cross. And you will see that the cross is very near to our entry price, but the price at this moment is higher. It is at these candlesticks right here. So you can see the cross happened on this candlestick. So on the opening of the next one, right here we will have our exit. and let me put one horizontal line. Here it is. So that would be our exit, and I will just make it green very quickly so we will know that this is our exit. So the red line is the entry and the green line is the exit, and we benefit with this example about 19 pips, I think, and something. We enter at 116.44, exit is at 116.63, so about 19 pips. And something interesting with this strategy, if I zoom out, you will see how the moving averages go, and usually when the fast moving average crosses the slow moving average, this is a buy signal. But instead of buy, we are taking the profit here, because obviously they will cross when there is an up movement, right? Anyway, they will not cross. And you can see what happens after that. The price goes sideways and then it goes down. So if we enter at that moment and if we don't take our profit in here, then we might lose. So that's quite interesting with this strategy. It brings quick profits, and as well we have a stop loss and a take profit, which means that when we place the trade, so in MetaTrader you can use the one-click trading, which allows you to buy and sell faster when you see the signals, or you can go to trading new order, and from here we can enter the price, the different type of order we want to use. Is it pending order? If it's pending, it means that we put the price at which we want to enter, and we have the option to put the stop loss and the take profit. For the beginners, the stop loss is the level at which we want to stop the loss, or in other words, to exit the trade if we are in a loss, and the take profit is the level at which we would like to take our profit, or to close the trade if we are on profit. So for example, if we enter at 116.44, we can put a stop loss at 116.25, take profit at 116.80 or anything like that. I'm just giving some numbers randomly, but for this strategy we have stop loss of 77 pips and take profit of 65 pips. So 77 pips below the entry price is our stop loss, and 65 pips above the entry price is our take profit. Now I'm not going to put these levels, but what I wanted to show you is one regular strategy, I can say, which has two entry conditions, one exit condition, which is the moving average, but it's formed by two moving averages. And as I said, we have a take profit, and then as well we have a stop loss level. So you see how many things we have on the chart from a single strategy, and we have like 3 indicators, 4 in this case, the stop loss, the take profit. And imagine if you have to follow that on one chart. Okay, you will be able to do it. I'm sure you will practice for some time and you will know what you're doing. I'm teaching such strategies in my courses. Many of the students are applying them, but the hard thing comes when you want to trade many strategies at the same time to get more profits, right? And to diversify the risk between different strategies, because as you know, every strategy has losing period, it has profitable period, and you will see that in the next lecture where I will show the backtest of this strategy. But if you are trading just one strategy and you hit on the losing period, that could be a couple of days, couple of weeks, or even months. So imagine you're following the trades every day, executing the orders at the exact moment, and you are just losing because you're using this one strategy and it's in a losing phase. You won't feel comfortable and you won't be satisfied from your work. So the solution is to trade with expert advisors, because we can trade such strategies automatically. This is what the expert advisor is. All of that is executed automatically by the expert advisor. Or in other words, the expert advisor is the coded strategy, just what I have described here. And especially the strategies that have many indicators over the chart, like 3, 4, 5 entry rules, 2, 3 exit rules, it becomes really messy, and at one moment you will not be sure what you're looking at and you just get confused. And most importantly, we cannot follow the strategies manually all the time. Obviously, we need to rest, we need to sleep, eat, spend time with our family, work out, or whatever you do as a hobby. Or if you have a full-time job, most probably you won't be able to trade more than a few hours in the day, which means that you will not have the time to follow the charts and the indicators. So this is what the expert advisor is, a strategy like that, automated, and this way we have the chance and the opportunity to trade many strategies similar to that one, and we do it 24 hours from Monday until Friday, no pause, whatever we do, work, sleep, eat, the expert advisors are executing these strategies accurately, and we don't spend time in front of the screen. So in the next lecture, I will be showing you how we do a backtest for any of the expert advisors, so you can do that if you want for your trading broker. Alright guys, so if you have enjoyed that video, don't forget to like it and subscribe to get more of our free videos. Thanks for watching and take care.